Hi, everybody. Thank you so much for tuning in. We are going to talk about some income stocks that look very attractive right now. Before we do, be sure to click subscribe to my YouTube channel for all of my latest stock ideas and financial advice and investment research videos. And share this with any friends you might think. Store Capital, ticker symbol STOR. So let's dive into that one a little bit. So, Store Capital is a real estate investment trust. They own about 3,000 properties, most of which are occupied by tenants in either the retail, service, or manufacturing industry. The company has a 5.7% dividend yield and is one of the largest income stocks in my own portfolio. Now, a lot of people get scared when they hear the word retail, and for good reason. No one wants to invest in kind of these dying malls you see all over the place or high end retailers that have been closing stores left and right. But this is different. Most of stores tenants are in businesses that are either recession resistant to e-commerce disruption, or both. Manufacturing businesses are obviously not that worried about e-commerce, but in the retail and service side, just to name a couple of the top tenants, Ashley Furniture is a big Store Capital tenant. Camping World's among its top 10, and Bass Pro Shops is a big tenant. And its top overall property type is restaurants, both quick service and casual dining. So all of these are net leased properties, meaning that tenants sign long-term leases with annual rent increases built in. This has allowed Store Capital to maintain an excellent 99.5% occupancy ratio. Its properties are generally profit centers for the companies that occupy them. Store Capital is kind of unique in that it demands property level financial data, meaning how profitable is that location of your store. Um, and so it's the locations that its tenants really rely on, very little risk that they're going to shut down anytime soon. Store has grown dramatically since it went public about 7 years ago. It acquires properties at excellent costs of capital. The average property it recently acquired gets about a 7.5% initial yield on cost. Meanwhile, Store's credit is so good it's only paying in the 3% to 4% interest rate range to borrow money. So that's a very, very nice spread. A lot of opportunity here to grow. Um, and as a result of this growth, it's been able to increase its dividend at an annual rate of over 6% a year since its IPO. So not only is it paying a high dividend, I mentioned a 5.7% yield, but its income is steadily increasing over time and still represents a relatively low percentage of its profits for a real estate company. Number two on my list is Walgreen Boots Alliance, which most American investors just know as Walgreen. Ticker symbol is WBA. It really shocked me when I was doing some research a while ago to learn that Walgreen has been beaten down to the point where it's paying a 5.4% dividend yield. It's trading right near its 52-week low for about 8 times forward earnings, which is a crazy low multiple. So investors are obviously expecting a slowdown, which is understandable in a recessionary or a pre-recessionary period, I guess I would say. But the core business of Walgreens is very solid. It sells non-discretionary products, meaning it sells people things that people need, and it really has a lot of long-term growth potential in the healthcare side of its business. Its Village MD business is 120 clinics. It's planning to build that out to 200 by the end of the year and continue to grow from there. It has a partnership with Buckeye Health Plan called Walgreens Health, and just a lot of big potential here. People want kind of localized, easy, convenient options for care at affordable prices, and Walgreens could have a lot of potential in that. Last but certainly not least is Bank of America, ticker symbol BAC, one of the first stocks I ever bought, and I have never sold a single share of it. Bank stocks are starting to look very, very attractive right now. Bank of America has a 2.6% dividend yield, so not the highest yielding of the bunch, but very reliable income. It's got strong asset quality, it's got great management, and it could really stand to benefit from rising interest rates. Bank of America pays a very low cost of capital on its deposit. It actually has a greater proportion of non-interest bearing deposits compared to most of the other big banks. In fact, Bank of America claims that a 1% upward shift in interest rates would result in about $5 billion of additional net interest income per year for the company. We've seen rates start to rise already, In the second quarter, when rates had really just started to rise to where they are now, Bank of America's net interest income grew by 22% year over year. So a lot to gain here. Banks are beaten down right now because of recession fears. Obviously, defaults start to tick up when people can't pay their bills, when unemployment starts to rise, things like that. And inflation can really put a damper on consumer demand. So there are some legitimate fears, but I think they're more than priced into the stock at the current level. Bank of America is trading for just about 10 times earnings, just over its book value, which is historically a very low multiple for this one. Um, so as far as the big banks go, this is by far my favorite, and it's a great income play. And a real key takeaway for all three of these are excellent income and growth plays. They're relatively low volatility compared to the overall market, especially when you consider some of the technology stocks we've seen really just kind of take investors for a roller coaster ride. But don't mistake them as boring income stocks. These are stocks that not only pay very good dividends, they could grow those dividends over time, and the share prices can grow over time as the businesses expand. So great combinations of growth and income. I would not be surprised to see all three of these handily outperform the market over the next decade or so. I currently own Store Capital and Bank of America in my own portfolio, and Walgreens has jumped to the top of my watch list. So there's three great income ideas as we head into September. And please tune in for the next installment of my income investing videos. This video is sponsored by the Motley Fool. Check out the link in the description to receive the top 10 best stocks to buy now, or visit fool.com/Frankel.